What's up, Periscope? Ty Crandall here with Credit Suite. We are making a shift today. So for all of those that follow us here on Credit Suite's Periscope, you know that we commonly talk about how to get money for your business. We talk about a lot of options on how to get corporate credit for your business that's linked to your EIN and not your personal social. And we also extensively dive into all different types to get business loans. As a matter of fact, if you look through our scopes for the last matter of months, you'll see that we decoded a lot of that stuff. Talked about how to get business credit for your EIN that's not linked to your SSN. We've talked about business loans. We talked about how to get all different kinds of business loans. What's up, Pretty Washington? Welcome to the scope today. You're always the first one in. You're always going crazy with the hearts early on, and then you leave me early. I miss you. But I love you. Thank you very much for coming. And we also talk extensively about getting business loans. As a matter of fact, the last month, we've actually went pretty extensively over how to get business loans. As soon as I leave home, you go live. I know, that's the way it kind of works out. Welcome, Gray House Consulting. Welcome. Manna Morris, welcome. I appreciate you coming in today. Working for ULLC.com, welcome. Thanks for coming in today. So I'm really glad everybody is in here. And we are going to make a shift over the next month or so and talk about something that's super important, which is how your credit scores work. We're going to decode these in a way that you've probably never seen us decode them before. Ty, what up? A Complete Life, welcome. Hola, welcome. And Steve 78, whoa, I don't know what you're saying there. But anyways, so thank you guys all very much for coming. Hey, Teresa, welcome. Thanks, everybody. So if you go to creditsuite.com/scope, you can see my previous scopes where we've dove in and decoded business credit over the last few months. We've decoded business loans over the last month. We've talked about a bunch of different ways to get business loans. Now, starting this week and for the next few weeks, we're going to dive in and talk about something very important, which is credit scoring. I'm going to teach you how this stuff works because what I've learned is when you know how credit scoring works, you can easily control what your scores may be. If you can slow down. Sorry, buddy, this is my actual normal pace. The way my brain works, the way my mouth works. Hey, Ty, you're the best. Thank you very much for coming. Hello, thank you very much for coming to Complete Life. I had a consultation on Memorial Day. No one called me. I'm sorry about that. You should be scheduled for Memorial Day. But if you go to creditsuite.com/consult, you can get rescheduled with us. We'd love to have you rescheduled. So your credit scores are obviously very important to what you do in life. On the consumer side, it controls everything from the rates you get on credit cards, how much you get approved for on credit cards, mortgages, car loans, and more. Pulling credit today, we are not pulling credit today, but we should be soon. We're actually just finished an integration with NAV where we have access to DMB and Experience scores that we're finishing up into next month, so we'll talk about that. Prosperous, welcome. Thank you very much for coming. So consumer credit scores, obviously very important. You already know that. Commercial credit scores, business credit scores, equally important to your business because they will determine the rates and terms you'll pay if you're issued credit. They'll determine the rates and terms you get on loans, if you'll get approved for loans, denied loans, those type of things. Need help getting inquiries off your credit report? I can get you, if you reach out to us, info@creditsuite.com, we'll get you references with several credit repair companies that can help you with that. We don't do credit repair, but we work with a lot of companies that do. And the third type of credit that a lot of people don't know about is called bank credit. And what you might not know is as a business owner, if you have a business bank account, you have also what's called a bank rating or a bank credit score. This is an internal credit score that you'll never know about, you'll never see, but it controls whether you'll get a business loan or not. As a matter of fact, you have to keep an average of a certain amount of money in your bank account. If you don't, then you won't even get approved for an SBA loan, ever. So we're going to decode this over the next few weeks. Today we're going to talk about consumer credit. Next week we're going to start talking about business and commercial credit scores. And then we're going to talk about bank credit or your bank rating. And by the end of these next few weeks, you're going to know everything you need to know to control all three types of your credit scores: consumer, business, and bank credit. And this helps you get the most amount of money you can get on the consumer side and the business side. Pretty Washington, consumer credit, business credit, bank credit. Yes, that is exactly correct. Consumer credit, business credit, and bank credit are the three types of credit you have as a business owner. If you're a consumer and you don't own a business, then all you have is consumer credit. If you own a business, you also have business credit and you also have bank credit, which we'll be decoding. NAV treated me like B&D shoveling products and said, I will never ever get business credit without a personal guarantee. Look, NAV is really good with credit monitoring, but people keep in mind, that's what they do with their credit monitoring. They're not there to actually help you build business credit. They give you access to business credit accounts. They give you access to loans. They give you all kinds of access to places you can get credit financing, but that's not what they do. What NAV does is offer you credit monitoring. So if you want to go to NAV to get credit monitoring, they're the best and cheapest probably that exist for that purpose, but they're not going to be the ones that'll help you through the process step by step of building business credit. So just don't have that expectation, and you'll love NAV because they have an excellent platform and an awesome product. So today what we're going to be doing is talking about consumer. We look at the whiteboard here. There's 3 types of credit we're going to be talking about in the weeks that come. We're going to be talking about consumer credit. We're also going to be diving in and talking about bank credit. And then we're also going to be talking about business credit scores, how all this works. And the reason it's important is because when you know the factors that make up credit scores, you can easily, I mean this in a good way, manipulate your own score. Not manipulate as in an illegal way, but manipulate in a good way. When you know how things are calculated, you know what to do to improve each aspect of the score to maximize your score. And that's what we're talking about today with FICO. So, MT Al Sith, welcome. Your first day on Periscope. Welcome, and thank you for spending it here. That's awesome. So today we're talking about consumer credit, next week business credit scores, the following week bank credit scores. Let's dive in and talk about consumer credit. So there's a couple different types of consumer credit scores you're going to run into. FICO, which is estimated that about 90% of lenders use, and there's also something called Vantage Score. Now this is actually a score provided by the credit bureaus. Now what's interesting is when you pull your credit scores with credit monitoring, you will typically not know if they are FICO or Vantage, but we'll talk about both so you can learn how both work. So the FICO score is basically done in a pie chart that kind of looks like this. The biggest factor of your score is called payment history. The second biggest factor is utilization. The third is the length of credit you've had, the length of time you've had credit. 10% is your credit mix, and 10% of your FICO score has to do with new credit. You can get these pie charts everywhere, but we're going to dive in and talk about this on a much deeper level. So the biggest factor of FICO is your payment history. It accounts for 35% of your overall score, about 5% more than the second biggest factor, which is utilization. This has to do with 3 factors: the recency of the payments you have, the frequency of the payments you have, and the severity of the delinquencies that you have. So if you have a derogatory item on your payment history, how recent is it? How frequently are you paying late? How severely are you paying late? Those 3 things, and thank you guys very much for going crazy on the loves. Those 3 things make up this biggest aspect of the FICO score that have to do with payment history. So let's talk a little bit more about these 3. What FICO tells us is this. They tell us that, first of all, if we go late on a payment, the more recent the late payments are, the more damage they're going to cause to our FICO score. You've helped me a lot. Thanks, Ty. Appreciate that, 409. That's awesome. So the more recent the derogatory item, the more severe the damage is. So as your derogatory items get older and older, they have less of an impact on your score. FICO also tells us that the frequency, or how often you are late, also affects your payment history. It has a greater weight the more frequently you are late. So if you go late on an account, don't freak out. Just don't continuously go late on a lot of accounts, or that's really going to damage this aspect of your score. Don't get me wrong. You don't want to go late on any accounts. But if you go late on an account on the consumer credit side, don't often go late, because that'll hurt your score more than if you're late one time. The severity of it. How late are you? Are you 30, 60, 90, or 120 days late? Obviously, 120 days late calculates heavier into the score than a 30-day late. This is kind of common sense stuff, right? The payment history is pretty easy and basic, but let me teach you a hack that most people don't do and know about. It's that if you have late payments on your consumer credit report, well then what you should do is get more positive payments. The more positive payments you have that outweigh the negative, the higher the score is going to be. So I owned a consumer credit company. I built it and I sold it years ago. And I can tell you this is the one mistake people made when they fix their credit. They expect somebody to help them delete the derogatory items without adding positive. If you want to build a good consumer credit score, you have to add positive credit as well as also dispute and delete delete derogatory items that are inaccurate or unverifiable. If you dispute and delete inaccurate, unverifiable items, that will reduce the amount of payment histories that you have that are in default. And it'll also, if you add more positive payment history and get approved for more accounts, then that's going to offset the negative accounts you have. So the key to improving your payment history is twofold. Obviously, pay your bills on time. And if you go late, don't go 60, 90, 120 days late. If you pay a bill late that reports to the credit reports, don't go 30 days late and it won't even report. Or if you have to go late on a payment, don't go late on a payment that reports to the credit reporting agencies. That's your first shot. If you know you're going to go late on an account that reports to the reporting agencies, try not to go 30 days late and they won't even report you as late. Okay? And also, if you are going to go late, try not to go more than 30 days late and try not to go more late on multiple accounts. Okay, the other thing with payment history is add positive accounts. The more positive accounts you have to offset the negative accounts that you have, the higher your score is going to be. So some hacks when it comes to payment. The second biggest aspect of your credit score is called utilization. It accounts for almost an equally proportional amount of your credit score's payment history. Guys, this is a really big deal. What this means in the math of FICO is that by overutilizing accounts, you damage your scores almost as much as if you paid your bills late. Don't believe me? That's the math. Look at this. Okay, it's hard to get credit when you're trying to build. I get that, and I'll talk to you about a few options. Well, let's go back to that. So you are right, and thank you guys very much. Toddler, thank you very much for coming in your first day on here. I appreciate it. So let's talk about that. There's a few different ways you can when you have credit issues. First of all, secured credit cards are a great way to go. There's also something called My Jewelers Club. And My Jewelers Club is one of the best accounts I've ever seen for credit rebuilding. Because what they'll do is it costs you like $100 and you have to pay like a small monthly fee, but they give you a $5,000 line of credit that reports, last time I checked, to 2 reporting agencies. So what happens is not only do you put a positive account on your credit report that you're paying on, but you also add a massive amount of credit that if you keep your payments low or the balance low, you add a lot of massive utilization. So I love this My Jewelers account. We would see some people that raise their score 50 to 100 points only because one account was added. Look at the math, it makes sense. You're improving your payment history. You're adding massive utilization or available credit so that one account improves 65% of your overall score. And if you don't have a bunch of credit reporting, you're also improving the credit mix. So about 75% of your score is improved. It's called My Jewelers Club. It's definitely worth looking into. Utilization, 30% of your score. If you overutilize your revolving accounts, you damage your score almost as much as if you pay your bills late. Don't believe me? Look at the math. 30% utilization, 35% payment history. That's all the score is math. So you can easily manipulate your score in a good way by knowing the math and working on the areas that have the greatest impact to the score. So utilization has to do with how much you owe, the percentage that you owe against the limits, those are the two. How much you owe and the percentage that you owe in relation to the balances versus the limits of the account. A lot of people think that you lower your score with less if you're over 30% utilized. That's not actually true. I recently learned this, even though I'd been saying that for a long time, from John Alzheimer. And if you know John Alzheimer, he's pretty much the foremost expert when it comes to consumer credit scoring. And what John says is that the FICO score and the utilization of the FICO score can be damaged with any amount of money that you put on there that's a balance related to the actual credit limit. Preferably, you want to keep your balances below about 2% of your limits, and the higher your balances go in relation to your limits, especially over 30%, that's when you really start damaging your score. But you can start hurting that aspect of your score by having any balances that are related to your actual limits. So the best thing you should do is use credit cards and pay them off every month, or carry a very small balance below 2%. That's how you improve the utilization of your credit score. And don't forget that My Jewelers Club card, it's a great account to go with because it adds a bunch of credit to your report and you have a lot of utilization, or you have a big difference between your balance and limit, and that one score can result in a massive improvement to your score. I've been following you for a couple months and I've started building business credit for my business. Good job working for you, LLC. Great job, because next week we're going to talk about business credit scores and I'll give you some hacks that'll help you along the way as you're doing that. So I know it works. That's awesome. So remember, if you have bad credit, look at My Jewelers Club. Look at secured credit cards. Add revolving credit to your scores, to your credit report. You'll be blown away at how much of an impact it makes positive to your credit score. It's one of the biggest things you could do. Remember to pay your bills as agreed. If you have derogatory items, either yourself, go online. I have a video on YouTube that teaches you how to fix your credit, or even better yet, call a credit repair company. Guys, there's a lot of legitimate credit repair companies out there. Most of them that I've dealt with are very legitimate. And these guys know stuff about fixing credit that you and we ain't ever going to know. Okay, I used to know this stuff, but it's so outdated. They know what they're doing. So nowadays, they'll charge you on a pay-per-deletion basis or a small monthly amount. So you might not even pay them unless you get an item deleted. So work on fixing your own credit or get with a credit repair company that can help you, but do not let derogatory items just sit on your credit report. Here's why. Because in order for any item to legally be on your credit report, it must be 100% accurate and verifiable and be on there within the time frame that it's supposed to be on there, okay? The Credit Movement on Facebook, Working For You LLC, just said that might be his company, and you should check it out. Because, guys, there's a lot of legitimate credit repair companies out there that know these laws. And the law says, and nothing can be on your credit report unless it's 100% accurate, verifiable, or timely. Which means if it's past the statute of limitations, or if there's any inaccuracy, or if the creditor can't 100% verify it, it can't be on your credit report. That's the law, okay? He's a rock star like that. I appreciate that. So give me that name one more time, and I'll throw that company out there. Anybody that does credit repair, throw your names out there right now. I don't, but people need help from legitimate credit repair companies. So where we are. Payment history. Don't pay your bills late. If you are, try to keep them less than 30 days and don't pay a bunch of accounts late, and get with a credit repair company or yourself dispute your derogatory items. Utilization. Get available credit. I've given you a source, talked about secured cards to add revolving credit. It's equally as important as your payment history. Third aspect of your score, length of credit history. How long you've had credit for. This has to do with the age of the oldest account you've had and the average age of all of your accounts. And then you were saying the Credit Movement on Facebook. So the age of your oldest account and the average age of your credit affects utilization or length of credit history. It's the third biggest aspect of your score, something you can't fake. Because how long you've had credit is how long you've had credit. That dude is the man, listen to him. So then this dude is the man, listen to him. I appreciate that. So again, length of credit history is the third biggest factor to your credit score. It's something you can't fake. It's why you need to get credit early. How early? Jewelers Club. It's good in the beginning, but 3 months in your credit drops because they stop reporting. Demon Eyes, I don't know. I haven't worked with them recently, but the last time I checked, they are reporting to 2 of the 3 reporting agencies. So I would check with them about it, because if you stop paying them, they might stop reporting. But the people that we've referred to seem to do pretty well there. And keep in mind, guys, I'm not referring you to some affiliate link where I get paid. I'm just telling you what's worked with other people in the past. So length of credit history, how long you've had credit. How long should you have credit? Let me tell you how. How long? As long as you can. My kids have credit. You know how old they are? 6 and 8 years old. If you have kids, you have till about July of next year before it is mandated that authorized user accounts require a date of birth. Until that point, a lot of credit card companies don't even require a date of birth to add them as an authorized user. So my kids are added to my wife and I's credit cards at 6 and 8, and guess what? By the time they get old enough to get credit or use credit, they're going to have their own established. How often should you check your credit? Monthly. I'm following you and him, and I'm very close to being on the next level. Awesome. You should monitor your credit monthly. I use something called Privacy Guard that I've had for years, and they send me alerts when my credit changes, so I don't need to monitor it because they notify me of changes. So listen, it's a great idea. I don't want to co-sign for my kids when they get to be 18 for their car. I want them to be able to buy it. So you know what I do? I add them as authorized user to my wife and I's credit cards. Of course, we pay them as agreed. Of course, we manage them responsibly. So my kids have 700 plus credit scores and they're 6 and 8 years old. But you only have until the middle of next year to do this. Then the law changes where they have to get a date of birth, and then you're not going to be able to add authorized users. So help your kids if you have kids. Because it would have been awesome if somebody helped you probably. So if you don't, consider getting added to somebody else's account as an authorized user. Get a family member, a friend, somebody that's close to you that will let you get added as an authorized user to their account and maybe give you access to the account. I don't know, that's your choice. But that can add some length of credit history to your report if they've had credit for a long time. It's the only hack you have. The only way you can get a longer credit history is getting added as an authorized user. I did it for 20 years old, but did not know I could do it for my 9-year-old. Yes, you can do it for your 9-year-old, but hear me out. Some credit issuers will ask for date of birth. So if they do, don't be surprised. Call your next one. We called our credit card companies. They said, nope. We called Chase. Yeah. Sure, what's their name? We give them their info, we add them. So you can definitely do it with some card companies, some you can't until next year, then you can. You cannot add backdated trade lines to credit reports. I've tried, it won't work. So what you've got to do is you've got to use authorized user accounts. It's the only hack you have to have longer credit. Get added to somebody's credit that's had it longer. The fourth biggest aspect of your credit score, new credit, i.e. inquiries. It's 10% of your score, and here's how it's calculated. The number of accounts you've applied for, the number that have opened, the time passed since opened and applied. Okay, so this matters quite a bit, okay? Because first of all, they're looking at the difference between accounts that you applied for and opened. They're looking to see, did you apply for a bunch and get denied? That could hurt your score more than if you just applied for a bunch. Don't get me wrong. Applying for a bunch of new credit will hurt this aspect of the score, period. How do I remove hard inquiries? Well, we'll talk a little bit about that in just a second. So, new credit, 10% of your score. When does the 7-year clock start on bad debt? Seems like creditors renew the debt every year. The 7 year starts on the date of default, or the last time you made an actual accurate payment. So the last time you made a payment, that becomes the first day of default, or the first day that you go late after your payment is due. That is the first day of default. 7 years goes from that date when it comes to how long something can stay on your credit report. So new credit. The number you applied for, the number you opened. If you applied for a bunch and got denied, it hurts your credit more than if you applied for a bunch and got approved, but applying for a bunch still hurts your credit score. The time passed since you opened and applied is also a factor. And all auto and mortgage inquiries in the last 30 days only count as one. It only works for those two, auto and. Let's talk a little bit more about this. People think that inquiries lower your score. It ain't true. Inquiries don't lower your score. What lowers your score is groupings of inquiries. When you apply for a lot of credit in a short period of time, that hurts your score. Don't believe me? Apply for one credit account when you haven't applied in 6 months and go look at your score. It probably won't have dropped even 1 point. That's why there's an easy way to get off the updated date when they say it's wrong. That's why there's an easy way. Yes, because stuff can't be on your credit report beyond that 7 years of date of default. I've realized that. So, with inquiries, what it comes down to is don't apply for a bunch of new credit in a short period of time. If you don't do that, you won't hurt the inquiries. Don't go get denied and keep applying and get denied and denied. That'll crush your credit scores. Don't do that. Instead, be very cautious of how often you put inquiries on your credit report. Myself, and whenever we call a credit card company, which by the way, we do all the time to raise our limits, because the better our utilization is, the lower or the higher our scores are, obviously, right? So my wife and I do this all the time. We call our credit card companies and we apply for a new credit card, or we apply for a increase to our limit. And if they tell us they're going to do a hard inquiry, we immediately cease and say, no, thank you. Here's why. Let's say you have a $5,000 credit card and others have raised your limit to about 10 grand. So the highest limit credit card you have is 10. and you have one for 5. And you call them and say, hey, would you raise my limit from $5,000? Would you raise it? And they say it's going to require an inquiry. They're going to pull your credit, and what they're more than likely going to do, 3 to 6 lines of credit is a sweet spot for personal credit, so I've been told. We'll talk about that in a minute when we talk about credit mix. So what they're going to do is they're going to pull your credit report. They're going to see your highest limit credit card account is 10 grand. They may raise your limit up from 5 to 10 grand. Congrats. You just converted a $5,000 credit card to a $10,000 credit card. So that's pretty cool. You got an extra 5 grand in credit. But let's look at what would happen if you use that inquiry for something else. Let's say instead of letting them pull your credit card, you said, no thank you, Mr. $5,000 limit credit card company. I'm not going to let you pull my credit. Instead, I'm going to apply for a new credit card, and then they see your highest limit's 10 grand, and guess what they give you? A $10,000 limit account. So instead of getting an extra 5 grand by getting a new account, you just got 10 grand. That's why I do not let people do hard inquiries on my credit report if I'm asking to have my limits raised. Because if you do that, then what's going to happen is they're going to only give you a fraction of what you could get if you got a new credit card. Okay, just rule of thumb. It's exactly why you don't want to do that. And a lot of credit card companies, if you're using it regularly and paying your bill on time, they will by default raise your limits without an inquiry. So don't put a hard inquiry on there to raise your limits. A lot of card companies will raise your limits without the hard inquiry. Somebody asked, how do you get hard inquiries off your credit report? Well, you dispute them. You dispute them through the credit reporting agencies and tell them why the inquiry shouldn't be legitimate. With some reporting agencies, if you send the dispute certified mail, I've heard great things about that helping to get things deleted. If you really know the credit account is not yours, dispute with the credit bureaus. They'll give you a code and a phone number on the report they send you. And I just messed up with Capital. Don't worry, working for you. I got your back. We will make sure you don't mess up again. So if you have inquiries you know are not yours, dispute it with the credit bureau. If it stays on your report, call them and give them the code on the credit report that they give you. Then what is going to happen? Hey, Francis Joseph M3, welcome. First day on Periscope, welcome. So what they're going to do is if you call them and tell them, I absolutely did not authorize this inquiry by phone, they will delete the inquiries. But let me give you some advice. I'll tell you, don't do this with accounts you think are legitimate. Let's say you apply and get a Chase credit card. Then you dispute the inquiry. Chase can, and I've seen it happen, shut down the credit card they just gave you because they think it's fraud because you just disputed with the credit bureau that you never applied for the account to begin with. It can be problematic if you go in and start disputing all of your inquiries, especially with credit you've been issued, because it's easy for those loans to be called back or for those credit cards to be canceled because of potential fraud. So be careful disputing inquiries unless you know that they are really not legitimate. If they're not legitimate, you dispute, and the language you use is called permissible purpose. Yeah, that's what Lexington Law did, disputed everything. Sometimes it works, and that's okay. Okay, but it can get you in trouble in some cases, and regular disputing of inquiries usually doesn't work. That's why I found dispute, they send you a report, you call them on the number they give you with the code that you have to have from that report. Dispute by phone, you'll typically get them deleted. I asked my buddy the other day, he said, I'm not in the consumer credit industry anymore, and he said certified letters, I think with Equifax, are very effective as well to get inquiries deleted. So if you hacks there to help you with inquiries, watch out for groupings of inquiries. Remember, all mortgage and auto inquiries within 30 days only count as one, but those are the only industries that's the case. My score went up almost 40 points. Good job, Bruiser 63. That's awesome. Whatever you're doing, keep doing it. And remember, guys, dispute the heck out of stuff that you think is inaccurate and verifiable. I talk to a lot of people that say, yeah, I had the account, I went late on the account. It doesn't matter if you went late on the account. What matters is that every single point of data on that credit report is accurate. If every point of data is inaccurate, it gets deleted. And that's why in owning a credit repair company, I can tell you from experience, when we fixed people's credit, 80 to 90% of accounts were deleted that we disputed because they weren't 100% accurate as required by law. How can you help with credit issues? I can't. I don't do consumer credit repair, but if you email us info@creditsuite.com and ask for a reference, we'll give you a reference to a reputable credit repair company that can help you. Guys, that's the best part of me doing this scope. I've owned a credit repair company. I've sold it. I know a lot about it, but I'm not trying to sell you on credit repair services. I have no benefit in doing so. I don't even own a credit repair company. But if you want to reference to somebody that does, we will let you know. Realistically, how long does it take to get your credit score up? 30 days. Because a credit dispute with the bureaus only takes 30 days. Pay your bills on time, don't be late, yes. But also knowing this formula we're going to talk about helps, because let's say you pay your bills on time, but you overutilize your revolving accounts. You apply for too much credit. You have the wrong credit mix and too much of one type of account. All those type of things can adversely affect your credit score. So if you are coming in and you're disputing inquiries, the language to use is permissible purpose. The Fair Credit Reporting Act says nobody can pull your consumer credit without your permission. They define your permission as permissible purpose. We'll talk about this next week with business credit scores. They don't need your permission to pull your business credit reports, but they do in the consumer world. So a lot about inquiries, a lot of talk about credit mix, the fifth aspect of your credit score. It accounts for 10% of your score, the same amount as new credit. Okay, so when it comes to credit mix, they're looking for about this kind of utilization. About 3 credit cards, major credit cards, 1 to 2 auto loans, 1 to 2 regular loans. Do not get more than 2 auto loans or you'll hurt this aspect of your score. Do not get more than 2 other kind of loans or you'll hurt this aspect of your score. Do not get more than 2 mortgages or you'll hurt this aspect of your score. When somebody's asking, when do bad, good marks drop off? 7 years, 10 years? Biggest thing you can do is pay your bills before they report to the bureaus. Okay. So accounts can be reported on your credit report 7 years past the last time that you went, or past the first day of default, which is when you went late. Unless it's a public record such as a judgment or BK, those can stay on there for 10 years. All the rest, 7 years. Public record accounts, 10 years. Credit mix, 3 credit cards preferably. A little more is not going to hurt you. And again, if you have store credit cards on top of the major credit cards, it's still not a problem. 1 to 2 auto loans, 1 to 2 other loans, 1 to 2 mortgages is what you should have. New credit score goes on the law July 1, 2017. Elaborate. Well, there's a lot of new stuff. But one of the biggest things people are talking about right now is the decision that just came down from the Supreme Court. And it has to do not with consumer credit reporting at all, but Fair Debt Collection Practices Act. Is Russia a good country? Don't know. Never been to Russia. Have a friend from Russia though. He's really a cool dude. So that being what I think what you're talking about is the Supreme Court. There's no change that I know about to the Fair Credit Reporting Act that's taking place next month, and that's the main law that governs consumer credit reporting, okay? But the Supreme Court just came down with a decision that does affect how debt collectors are actually being called or determined to see if they can actually be a third-party debt collector or not, but that doesn't have anything to do with your consumer credit, so you are safe there. So, here are the 5 aspects of your score. Here's the pie chart. Payment history is the biggest aspect. How you pay your bills. The recency of your derogatory items. The frequency, the severity. Utilization is 30% of your credit score. How much you owe in relation to your limits. The percentage you owe in relation to your limits. Length of credit history, 15% of your overall score. The age of your oldest account and the average age of all of your accounts. New credit, 10% of your score, the small sliver here. How many accounts you've applied for, how many you've opened, the time passed since, and how much you've opened and applied. Okay, and the last part of the score is credit mix, which is 10% of the score. And about 3 credit cards or more, 1 to 2 auto loans, 1 to 2 mortgage loans, 1 to 2 other kind of loans. We've talked about a bunch of hacks to score. And I will also look into what's going on in July. I don't know enough about it to actually have a conversation with you about it today. And to be honest with you, I don't talk about stuff I 100% don't know. And I'm not afraid to tell you on stuff that I don't know everything about. So I will look into this, and I appreciate the shout out on the July law. I'll take a look at it. But I will tell you the most recent thing that's affected the consumer credit industry is the new Supreme Court decision that just came out, I think, this week. And that absolutely will have effect on you when it comes to debt collecting, but not consumer credit. But that being said, Prince Philip, that's not very nice, man. Talking nonsense. So Prince Philip, teach us. We're paying attention. Okay, so I'm about to block Prince Philip. Before I do, though, I want to actually see if this person has any knowledge and can actually provide value of anything. So Prince Philip, teach us something about consumer credit so we can see if you're just a troll, which I think you are, or you actually have some kind of knowledge. So go ahead. No, Prince Philip, we're waiting, man. Come on. Well, go ahead. Teach us some knowledge. So we're all waiting here for Prince Philip, who actually thinks he has some knowledge to share. We'll see if he does. If not, we'll block him like we do 80 trolls. Okay, so let's go, troll. All right, so here we go. So you consume credit. Okay, so Prince Philip, go ahead. We're waiting. Please teach us something. So as Prince Philip tries to think of anything logical to actually say, I will go ahead and wrap up. So next week, guys, we're going to talk about business credit scores. I'm going to teach you how your credit scores work with Dun & Bradstreet, Experian, and Equifax. Way different than what you've ever seen with consumer credit. You need to brush it. Okay, so Prince Philip, so you're a troll and you have no value to provide. See ya. So that being said, okay, next week we'll be talking about business credit, and we're talking about business credit scoring. We're going to talk about how your business credit scores work so you'll know exactly how to control them with Dun & Bradstreet, Equifax, and with Experian. But I hope you enjoyed this scope. We mapped out the 5 aspects of your consumer credit score at a level that you've probably never seen. You might have seen the pie chart that actually maps out the 5, but we mapped out in depth the 2, 3, 4, 5 factors that makes up that one aspect of your score, which hopefully helps you, and talked about hacks to improve each aspect of your score. So get to work. Remember, if you need help with credit repair, we don't actually do that. Okay, so that being said, you can email us, info@creditsuite.com. We'll get you with a credit repair company that does. If you guys have anything derogatory on your credit report, dispute it. It just makes sense to do so, because things can't be on your credit report unless they're 100% accurate and verifiable and timely. Most derogatory items aren't. Working for you, LLC.com, for sure. I learned something. I'm glad you all learned something today. I look forward to seeing you next week when we dive into business credit scores. And in the weeks that follow, we'll be talking about your bank rating as well. So thank you all very much. Have a great day. I look forward to seeing you next week at 4 o'clock Eastern Time here on Periscope. Thanks, everybody. Have a great day.